Hello everyone, this is the pre-market report video for today 4th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Last Friday in US, all three major index opened more or less flat, but as soon as the Fed chairman made his speech in the college symposium at 11 AM Eastern time, US market turned positive. I mean, his general approach was always like this. If market was in positive momentum, then he will talk more hawkishly. If market was in negative momentum, then he will speak more dovishly. That's his always approach. But on Friday, he spoke more balanced. So first I will tell exactly what he said and then we can discuss is it hawkish or dovish. On the hawkish side, he said that fight against inflation is far from over and if required in future, Fed will increase the interest rate further on the upside. Then on the dovish side, usually in the previous all meetings except the last FOMC press conference, he always said that he was afraid of not doing enough to control the inflation. But on Friday, rather saying that, he said interest rate in the present level is more balanced. If I remember correctly, this is what exactly he said in the November month FOMC press conference as well. So on Friday, he spoke more balanced, but market took just the dovish side and it was clearly evident on the US index price movement. This statement also reduced the 10-year bond yield from over 4.35% on Thursday. It dropped to 4.2%. Also, because of his comment, as per Fed rate monitoring tool, not in May but in coming March itself, the chance of Fed reducing the interest rate jumped to over 60% from less than 25% in the prior week. Because of all those reasons, on Friday, all three US major index closed positive. Dow Jones increased by 0.82%, S&P 500 up by 0.59% and Nasdaq 2 up by 0.55%. In case of VIX, not much, but on the positive side, it dropped from around 13 to around 12.5. Then coming about oil, we discussed in the last pre-market video. On last Thursday, OPEC plus countries for the oil production cut, they agreed only for the voluntary reduction, not the mandatory. Again, that puts more pressure and oil further dropped around 1.5 to 2%. So on Saturday morning, Brent crude dropped to $79.5 per barrel and WTI crude dropped near $74.5 per barrel. Regarding Indian ADR, I made this small table. If time permits, every day I will create a similar table. Since this directly explains how I am comparing the ADR to the spot market, I hope it will be very easy for understanding. Anyway, as we see on Friday, all closed significantly positive, especially ICICI Bank. In US ADR, it increased over 3.5%. However, in comparison, even on Indian market on Friday, it increased substantially. However, still the arbitrage difference is on the positive side. It's still around 1% for both ICICI Bank and HDFC Bank. Then on the IT side, it's only Infosys looks positive, whereas Wipro looks more of flat to negative. So clearly for banks, we can say it's positive, but for IT, more of a mixed to positive. Then about GIFT Nifty, on Saturday morning, it closed at 20,490. As usual, equating it to our spot market shows that Nifty to open gap up of 100 to 130 points positive. So that's all about the global market. Now coming to Indian market. On Friday, after our market hours, RBI released the bi-weekly banks loan growth, deposit growth and weekly forex reserves data. All comes as really good. Loan growth again increased over 20%. Surprisingly, deposit growth consistently increased over 13%. I mean, both were really very positive, especially the deposit increase, since banks don't need to rely on bond sale or RBI for more money. Then regarding forex reserve, again, it reached near 600 billion US dollars, but not on the mark. Still, we can consider that also positive. Second, at present, most of us know this. In the state election, three major states, Madhya Pradesh, Rajasthan and Chhattisgarh, BJP won the election, whereas in Telangana, Congress won. Here, I'm going to talk purely from stock market perspective, not in favor of any. I mean, we have to accept this. Though market is rallying, but always we have little worries and uncertainty about 2024 general election. Madhya Pradesh, Rajasthan and Chhattisgarh accounts for 66 seats or 12% in Lok Sabha seat. Now, a strong performance in these states gives some better visibility to the spot market for the upcoming general election. So I expect market will start to factor the possibility of a BJP win in 2024 and the continuity of its growth existing program. And also to some extent it will create the fear of missing out for those who shorted Indian market or haven't yet invested. Thus this election result itself positive, but we can expect certain sectors and group of stocks that may outperform the overall market. For example, PSU stocks, especially banks and those in the defense and railway sector will expect to increase as they might directly benefit from the government's continuation. As a summary, US market closed positive, Indian ADR, GIFT Nifty and election results on Sunday all indicating the positive trade today. But however, we cannot rule out the possibility of profit booking since there is a high chance huge number of investors who got the better visibility about this election results might try to profit book today. That's the only negative I can see now. Moving on, as per stock open interest, Ashok Leyland, Tata Communications, MCX India, Hero MotoCorp, Wipro, M&M and India Mart got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Delta Corp, Power Grid, Muthoot Finance, Lupin, Hindustan Copper, Dr. Lalpath Labs and Dixon Technologies got an increase in open interest with a positive price close indicating long build-up. About the things to look out, during our market time at 12:30 p.m., Germany's trade data is due and in the aftermarket hours, European Central Bank President scheduled to speak. For US, October month factory orders data. So these are some of the items we need to keep an eye out today. Then in case of institution activities, MSCI rejig related volatility is over now, no volume spike. And on last Friday for the 5th consecutive session, FII was net buyers. The net bought for over 1,500 crore rupees. In case of DII, they also net bought for 1,450 crore rupees. Coming to technical, on last Friday, Nifty opened 60 points gap up. In the first 45 minutes, there was some resistance around 20,222, previous all-time high value. Once it crossed that hurdle, it added another 60 points and finally closed with 135 points positive. Thus, on the daily chart, it formed a bullish candlestick pattern with a minor upper shadow. On the positive side, first, it formed higher highs and higher lows for the 4th consecutive days in a row. Second, on the weekly chart, Nifty formed a big bullish candlestick pattern as it gained 2.4%, which was the biggest weekly gain since June, and also had a sharp upside breakout on the weekly basis as well. And third, still there is no indication of any reversal pattern. Hence, if the short-term trend of Nifty continues to be positive, we can expect further upside in the coming week. Here, if we consider March 23rd bottom to September 23rd top and following October 23rd bottom, then the 50% Fibonacci projection is around 20,510. Thus, we can expect some resistance there. Then on the downside, immediate support is at 20,140. In case of Bank Nifty, it opened 100 points gap up and continued its higher highs and higher lows formation for the 5th day in a row. Bank Nifty rebounded after a day of small profit booking and thus on the daily chart, it too formed a bullish candlestick pattern with a minor upper shadow. And also on the weekly chart, Bank Nifty too increased 2.4% and formed a long bullish candlestick pattern, breaking out the resistance level of 44,700. So the overall trend is still positive. And now 45,000 is expected to be an immediate resistance with a substantial support at 44,300. On the weekly options front, please note here the maximum call option open interest shifted to 21,000 strike followed by 20,400 and 20,300 strike with a maximum new call rating was at 20,400 strike and then 20,800. Hence, based on options, the immediate resistance is wide range between 20,400 to 20,800. Whereas the maximum put option open interest was at 20,000 strike followed by 19,500 and 20,200 strike with new put rating at 20,200 strike and then 19,500, which shows 20,000 as a crucial and critical support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.